Welcome to TradeTheNBI.com. This is John. This reports for the 28th. Well, yesterday we saw a nice move. Now we can see that we were below our ABM values here, and so we expected the decline to continue, and we got below the short algo. And I mentioned on Friday that with the healthcare bill not passing, we would see a significant sell-off into that, and they did. What was nice in the intraday, we started to see significant buying of that come back after we got into oversold areas, and all we're doing is backfilling these positive extremes from way back here. I actually have a couple more to go. We're not out of the woods yet. We're still right at the short algo here, and which is nice because you can use that as a pivot. 2341 as a above long, below short construct. They're pretty decent readings though. They haven't reached super oversold, which is very interesting when you look at it from a daily standpoint. But we just don't have any midterm buyers jumping in this, and now you have your orange stuck in the continuation zone at this particular point, so that hasn't turned. So from that standpoint, I think you still have to be cautious. A little bit more power from the NASDAQ here. You can see rising elements. It's a little bit safer play. The euro has moved right back into our expected zone, so that's right in line with what the central banks would prefer. Certainly takes some pressure off the U.S. Is overbought, probably have to retrace it a little bit, but overall, very strong move in the shakeout. And that's just because the expectations for growth now completely change, and not from a Fed standpoint, but from a market view, because now they realize they're not going to get the tax breaks, they're not going to be relieved from the Obamacare taxes. That's all going to have an impact, and that really indicates a change. Now, sure, we still expected bonds to do well simply because there's a flight to quality. Still a little bit bizarre given the potential interest rate. It does make the interest rate rise of the last quarter there a little ridiculous, preemptively pre-rising rates. It's going to have an impact, and we'll see how much it affects housing, and that their version of inflation is always interesting. Oil is dead. At least from a bullish standpoint. And gold making new peaks just like we expected. Has some tough. Now this is an interesting one. This is the fib level retrace program. If you right click it right here, you can format that one. It's very nice because it follows along, and as long as it sets the values that it looks for the peaks and lows, and then you can turn on or off any of the different values. So 76%, so on. The easiest way to see what those values are is we just right click over price, and it gives you all the percentages right there, so you have all the numbers. Now it's been scaled to match the whatever asset you put on there. So whether it's currencies, it would follow that exactly to X decimal points. If you have an hourly chart in pennies, it will do that as well. So very consistent. But what's nice about it is we're getting a tie-in to the long and short algo. Here's an example of how when we start to see a breakdown into new lows, watch this. We'll just go ahead and disable it. And you'll be able to see, so this is the regular long short algo, and these are the adjustments that it will make so that it follows a little bit more precisely based on specific both Fibonacci's along with the algorithm. So we get a little bit more interesting tie-in, and this is so far is just for the short portion of it. When the short algo goes above the long one, it doesn't create as wide as spreads, because sometimes when you have like here, it grows too big and you get too many ATR gaps between them, and nobody's going to want to trade in that range. It's not until they get narrow again that it becomes more interesting to do it, and this certainly not just smooths it, but it ties it into specific retrace values, and not necessarily retrace values that are traditional Fibonacci, because nobody's drawing a Fibonacci that looks like this. That's not what they would be. They would be from a low point like this to a high point right here. Now, you theoretically could do that by just adjusting that numbers back level, and that would give you an adjustment, because actually if we ran a regular Fibonacci, why don't we just go ahead and do that? Here would be a regular Fibonacci to those highs. So you can see very different calculation doesn't match where they are. Periodically, they come to even points, but slightly different. And that's okay, because what this is going to do is also going to give us the ability to use ABM values and that from trailing stops, and that will give us a real broad ability to stay with market, and also give us ranges below where we would normally have the ABM green. And sometimes people would like to see what the expectation, and you'll know then, and that's why also on the formatting of it, I gave this one, which is line width. And you can actually increase it all the way up to like 99, and it increases the width of the lines if you wanted to like have a confluence area, so that makes it so much brighter. So it's a nice little feature. It only does it on the key ones, the 100%, 50%, and 0%. And I'll probably be changing this color from yellow because I think it blends in too much. I'm going to probably go with the azure blue. So you'll have like cyan first and then the darker azure blue as you get towards the 100%. And that way it sort of gives you the range, because you've got green that goes to an orange, kind of a warning, then the magenta, and then obviously you're at the 0 line. So sort of in the same equivalent as a stop sign, similar effect. So all in all, good stuff. Look for me on the Skype chat. We'll talk again later. Trade well.